Hi guys, welcome back. So today we are going to talk about bad debts and allowances for receivables. So what is this bad debts? So imagine you are giving money to your friend and we all have that one friend who will never give that money back. So that is nothing but bad debts. In the same way, companies also have some customers in which they think they will not recover their money. So in the company scenario, there are two things. They have bad debts and they create an allowance for receivables or provision for bad debts. So what are these terms? So basically, bad debts are the money which the company knows or is certain that it will not receive. That's the reason they are called as debts or which will not be recovered. On the other way around, for allowance for receivables. So in this scenario, let's take an example. Tata Steel has sold 100 steel bars to another company, and due to some reasons, it thinks that the company will not recover the money back from the customer. So the certainty is not fixed till now. So that is nothing but allowances. So in this scenario, company creates an allowance because the company is still not sure that the money will be received or not. In this scenario, we create an allowance for receivables. The main difference between bad debts and allowances are bad debts are certain which have occurred and the allowance for receivables are not certain yet, or the company thinks that it might not be able to recover. In that case, it creates an allowances for receivables. So why do we need to create these allowances? So basically, the companies do not create an allowance. The receivables figure, let's take an example. In the whole year, the receivable figure was 1 lakh rupees. If in that scenario, company knows out of which some amount will not be recovered, or it thinks that this amount will not be recovered. If company shows the whole 1 lakh on its balance sheet, the investors will see a different picture than it actually is, because the receivables figure is nothing but the amount the company will receive from its customers. So if it shows a wrong figure, it will create a bad impact, or it will create a wrong impact on the financial statements, and it will create a misleading information to a investor. That is why companies need to show the allowances for receivables to show a correct picture of how much the company thinks the money will be received from the customers. So that is why we create an allowance for receivables, to actually show the proper and the correct figure of the balances in the balance sheet to our stakeholders. Thank you so much.